Hey everybody, Brian here from quantlabs.net. Today I'm going to do another Dear Abby set of questions for traders. I haven't done this in a very long time, but I just got this earlier today. I've got a question about trading. Can small retail traders really compete with large institutions in the future? With retail trading disappearing in the future because AI, machine learning, quant, HFT, of course bucket shops will always exist in some form or another for retail traders. I think everyone can invest. Trading is too technical for most people. Okay, let's talk about this. First question, can retail traders compete against large institutions? Yes, of course. When you look at the growth of brokers like Interactive Brokers, there's a lot of retail algorithm or systematic traders are doing quite well at it. They find their own little niche that is, well, there's no competition, but they won't never tell you that. And profit within that little niche in the world of their trading world, I guess. And I know a lot of traders do that for my community, but I just don't know the specifics. Will retail trading disappear in the future because of AI, machine learning, quant, HFT? Of course, bucket shops will always exist in some form or another. Okay, let's talk about this, what I just highlighted here. I just took over a Toronto Forex trading group. We had our first meetup with that group. About 15 people showed. I would say about 2/3 were really new and trying to understand about algorithm-based trading and trying to get up to speed on where things are at in order to stay quote-unquote competitive. What I noticed is that a lot of them are reading probably a lot of blogs and YouTube videos or whatever, thinking that they can get rags to riches fairly quickly. We all know that's always been around. There's a lot of brokers that will put out those messages. A lot of them are corrupt. A good example of that, of course, is FXCM and many others, even the ones that I'm affiliated with. And that's that. And those shops will always be around. And there's nothing we can do about it, especially if they're operating in weird places like Cyprus or the Caribbean, where there's no regulation. So I think for most of these so-called retail traders that are getting into it really need to fully understand what they're getting into, and usually they can't figure out why they're losing money, even though theoretically they should be. I heard numerous stories from this Forex trading group that they put on a stop loss, the trade breaks through, the broker doesn't cut the lot or doesn't offer the profit once it's been attained, once the target's been met, and usually the broker will give some kind of excuse why that's not happening, and I've been hearing that a lot lately. So again, that comes back to retail traders really need to understand their software. When they are signaling things like stop losses, a lot of these brokers will go out and do what they call stop hunting and will basically cut you off prematurely from your potential profit. It's a lot of corrupt stuff going on, but there's ways to defeat it by having your own software that will protect you against the stop hunting, and you can do that through your own software that you write, where you set your own virtual stop loss. We've been talking about that for quite a while now, about a year. That's been more and more prevalent now that I'm noticing, and people can never explain that. So these newbie retail traders really need to understand that. Now, saying that, will these retail traders disappear? Yes, it's possible, but it doesn't mean that retail trading will disappear as a result. It just means I think that retail trading community will need to get smarter and adjust better for the examples just mentioned as one of many different things that a lot of these brokers will go against you. So I think with what I'm doing, it's really essential to understand what you're getting into, understand what I always call under the hood mentality, what's going on in your software, and really basically understand the full control of what the software does, especially if you are trading as a full-time living, or you're trading for retirement purposes. If you don't understand these, you will get smoked out. And you think really that your broker will care about that? Of course not. So regards to AI, machine learning, quant, all these here, AI, machine learning, I think it's proven, but not in the ways that we see in the public domain. Again, blogs, online videos, or whatever. A lot of these people either are reporters building the hype and never programmed anything in their life, or these are also newbie programmers that just go to some hackathon thinking they're a fully fledged developer, thinking they understand what machine learning is, and they just read it from another guy or gal who doesn't know anything about it either. The people that I've seen that do well in it, but they don't document what they're doing. I know what they're doing personally on machine learning. It's really, you could call it whatever you want. Big data, it's the same thing. It's a program. And there are ways of doing it, but these people come out of educational majors like, let's say, robotics or deep science of some kind. So they're a different breed on knowing how to implement their techniques, what they're learning, and again, not in the public domain, and applying it to the markets through their software. Again, Renaissance Technology is a great example of that. Quant, in itself, I've put up a lot of, not a lot, but quite a few blogs where quant appears to be gaining steam, and it is popular. It is an important element of overall trading. I just think that it's not as intelligent as we think it is. The real fundamental is everything that seems to be driving real profit in this industry. Quant's just a part of that, no different than technical analysis is part of that, and machine learning is part of that. But really, the fundamentals is what drives the real pricing and action based upon supply and demand, and the forces that drive that are things that technology cannot control, be it weather, political events, so on and so forth. And no intelligent software can really be able to gauge that. HFT's dying, or I shouldn't say dying, but it's consolidating. A good example is Virtu taking over KCG. And there's a lot of big funds that have been closing because of HFT. Just it's too competitive. The returns are not as good as they were. And again, it comes back to a lot of the shops. There's too many shops. I think the industries here are not either growing or shrinking. What's happening is radically changing. And yes, it does affect the retail trading. There will always be that space, but these guys and gals will be only fighting for the crumbs. And the professionals here are the ones that will get the majority of those profits because they're the ones that have the true edge. And depending upon how you analyze the markets, you can do very well in this space using these techniques, but you, like I said, you really got to know your software and be able to control it, meaning you have to write your own software, roll your own solutions. So again, here on the pension fund side, the big players, they're moving into ETFs, and that's a fact, Jack. So that's why active managers are kind of dying out, but they're shrinking, meaning mutual funds and that sort of thing. Everything's moving into indices through ETFs. So, can small traders really compete with large institutions? Yes, they can, but you better know how to adjust to what these guys are doing. There's a lot of ways they take advantage of retail traders. I'm not going to get into it because a lot of these retail traders will scoff at it, and they're basically getting the crumbs among the lot. But whatever. But the retail traders, if they know how to apply these techniques properly, know their software, know things like virtual stop losses versus real stop losses to signal back to the broker, they're going to lose, and they're going to lose more and more. And that's what's been happening, and that will continue to happen. By the end of the day, retail traders do have an opportunity, but if you don't have the drive to learn the software, to learn the programming, to know what your software is doing, you will eventually, as I said, get smoked out by the large institutions, by a variety of these techniques listed here. Okay, so it comes back to here. I think everyone can invest. Yes, you can through simple ETFs. That's probably the smarter way. But trading is too technical for most people. Again, I agree. And it's a changing evolution. For instance, in my case, if you're a book or a magazine publisher and you want to stay in the world of quote unquote magazine publishing, printing something, you can't because the market has changed. Therefore, you need to adjust. And it's the same here. If you're not, as a trader, willing to adjust to the technical requirements, you will end up, as I guess an investor, putting into ETFs and the like, and you become more passive. So as a result, maybe the retail trader space will shrink and just put money into ETFs and whatnot to really make any form of profit. Meanwhile, the active traders, the go-getter kind of guys, will understand that technology to make it easier for them. So yes, everything is possible. It just depends on your drive and what you're willing to learn and what you're willing to take on in terms of time. And that's why I always suggest for people, if you want to learn the technical, learn Python, learn the components of an algo trading system, and you're good to go. Hopefully, it just depends upon you, your time, and how far you're willing to take it to learn all that kind of cool stuff. Because your software, I think, is going to get more and more corrupt as brokers will require it because they want things like stop hunting and whatnot. And again, if you don't believe me, just check out that story on FXCM. All right, talk to you later. Hopefully I'll help you out.